And let's see here. All right. Well, welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with Apex Investing. And if you've been with us before, you know that we cover various different subjects. Sometimes we'll talk about different strategies and different systems, different ways you can take advantage of the capitalist products offered by Nadex. But at times we go back and we kind of cover the basics. And for some of you that have been trading Nadex for a while, some of this may seem very elementary to you tonight. But for those of you that are brand new and don't really have a good grasp yet of what Nadex binaries are and how they work, this will be definitely for you. And for you veteran traders that have been around a while, just bear with us here tonight, and remember, it's always a good idea to go back and recover the basics and make sure you have the basics down. And you just have to keep in mind that at some point we were all brand new as well. So we're going to cover some basics tonight, Nadex Binaries 101. So let's jump right in. Let's get our disclosures knocked out here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. The information here in this webinar is for educational and informational purposes only and is not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered by Nadex, and past performance not indicative of future results. So if you are brand new, make sure you do hop on over to nadex.com. You can go through the tabs here at the top and get some great information about what Nadex has to offer. Basically, Nadex offers two different products. They offer binary options and spreads. And you can go through each one of these tabs here and get some general information and some good training about what they are and how they work, different ways to use them potentially. Tonight, we're going to be talking about binary options. I also want to bring your attention over here under trading platforms. You've got the online Nadex trading platform. They also have a mobile app. But also right here, demo trading platform. If you don't have one of these already, hop on and get one right now, even while we're on this webinar. Nadex will give you a free $25,000 demo account, and all you have to do is just select a username, fill out some quick information, and hit open a demo. In just a few moments, you'll get an email with a temporary password. You can use that and your username and log right in. And once you do that, you can go up here to My Account, and you can hit settings and then password, and you can change that password to whatever you would like, and something easy for you to remember. It's a great place to get familiar with the Nadex platform, get familiar with the different products they offer on different instruments with binaries and spreads, practice entering and exiting orders, just get a good feel of it. Great place to practice any strategies or systems that you come across that you want to test and master. Get them down in demo and perfect them in demo, and then move over to your live account. To open a live account with Nadex requires just a minimum of $100, as you see here. So very easy to open an account with Nadex and get going. All right. Like I said, my name is John Skelton. I'm not with Nadex. I'm with a company called Apex Investing. Apex and Nadex, two completely different companies. Nadex is an exchange. Apex, we're an online education company of traders helping traders. We have over 20,000 members. We have strategies and systems. We focus a lot on risk management and probability trading. We're traders just like you. We're a Nadex education partner. We trade Nadex binaries and spreads every day ourselves, every day in our trade rooms. And we do these educational webinars each Monday at 5 p.m. For Nadex. Just kind of teaching you some different ways to help you understand what Nadex offers with their capitalist products and some different ways to trade them. So I've been with Apex for about 3 years now as head of operations. I've got about 15 years experience in finance and trading. I come from a banking background originally. And again, I'm a trader just like you, trade Nadex binaries all day long, binaries and spreads. So tonight, we're going to talk about what is a Nadex binary. What is the value of a binary? What markets can I trade? How to place orders, getting started, kind of a hold you by the hand, treat you like a 5-year-old, kind of one-on-one, act like you never heard of binaries before. What are they? Some of you may be familiar with binaries, some of you have heard about binaries, some of you have heard about these overseas binaries. We're going to talk to you tonight about Nadex binaries and how you can take advantage of them, how they work, and why they are so beneficial for you. Okay? So some of the benefits of trading Nadex binaries is you don't have any stop outs and you have no whipsaws. You have limited defined risk that's known before you enter. Before you enter the trade, you know right away what your potential max risk will be. And you can't lose more than that defined risk, okay? And your risk is the amount you put up to enter the trade. So there's no extra margin, there's no margin calls or stop outs like that. Everything is known right up front. You can do one contract or you can do multiple contracts. Now, what are binary options? They're short-term, very fast-moving contracts with only two possibilities at expiration or settlement. All right, at expiration, at settlement, a binary is either worth 0 or it's worth 100. Okay, what is a binary? What does the word binary mean? It's yes or no, 0 or 1, true or false, right? At expiration, it's either a true or false statement. Either the event did happen or it did not happen. Now, you can hold a binary until expiration, and at expiration it's either worth 0 or 100, or you can exit before expiration. And you can exit before expiration whether it's going in your favor or going against you. We'll talk a little more about that. Now, if the outcome of the binary is still in question going into expiration, meaning the market's very close to your strike price, as your time value is excuse me, as your time value is going there may be dramatic changes in the value even without a lot of market volatility. So the market doesn't necessarily always have to be volatile and moving like crazy or trending like crazy for the price of the binary to potentially be volatile. So binaries can be traded in volatile markets, trending markets, range-bound markets, or even flat markets. So they're a very versatile product. And they allow you to leverage the volatility of the Nadex binary itself for potential high percentage capped returns on a very small investment or potential high probability capped returns on a moderate investment in short time frames without having uncapped risk like a lot of traditional markets. A lot of traditional markets that you might trade, whether you're trading stocks, futures, Forex, options, whatever it may be, certain of those markets have potentially an unlimited risk. The market can go against you quite a bit, okay? But with Nadex binaries, your risk is known up front and it's defined. So you have limited risk on binaries. The floor of 0 caps the risk of long positions and caps the profit of a short position. The ceiling of 100 caps the risk of short positions and the profit of a long position. What does that mean? I'm going to show you a little example here. That might confuse some of you. I'm going to show you exactly what I mean here with some really easy examples to help you understand. In the small contract size, you never risk more than $100 per contract, or you could do multiple contracts, and it settles at cash value of the option. All right, there's no physical delivery of stock certificates. There's no physical delivery of commodities. You're not going to get, ounces of gold. You're not going to get a barrel of oil. It's all settled at cash value of the option. So let's make this easy and kind of show you an example here. So let's look at how a binary works. Let's look at risk and reward. And this is an example of a long position, meaning a buy position. All right, we think the market's going up, or we think the market's going to stay above a certain level. We are going to buy, right? So if we buy, keep in mind, at expiration, the binary is either worth 0 or 100. And the binaries can be priced anywhere in the middle between those two, okay? Just depending on the binary, all right? So just to give you a quick example of that, let's look here. Give me just 1 second. Okay, we'll come back to that. So let's just say we buy one Nadex binary at $25, okay? So our maximum risk is $25. When we're buying a binary, the maximum risk is the amount we buy it for. So we buy it for $25. Our max risk is $25. At expiration, the binary will either be worth 0 or worth 100. So our maximum reward would be $75 per binary, right? Now, currently between 5 and 6 p.m. Eastern Time, the Nadex platform, most of the markets are closed until 6 p.m. But what is a binary? Each one of these, notice here, is euro-dollar contracts, okay, expiring at 11 a.m. tomorrow. So here's a euro-dollar contract at 1.1400. Here's another one at 1.1380. Each one of those is a different binary contract, okay? What is a binary contract? Well, what does it say? It says that the euro-dollar will be greater than 1.1280 by 11 a.m. tomorrow. That's it. It's a statement. The euro-dollar will be greater than 1.1280. Yes or no? Will it be greater than that? Will it not be greater than that? By 11 a.m. tomorrow, will the market be above 1280 or will it be at 1280 or below? It's simple yes or no, true or false, up or down, right? That is a binary. Each one of these is a different binary contract. So there's different price levels to be able to make that decision of will the market be above or below that, and then they'll be priced differently based on where the current market is. Okay, so in a nutshell, that's all a binary contract is. It's a simple yes or no statement. You have to bear with me here. I'm fighting off a little bit of a cold. So the amount you buy the binary for is the amount at risk, and the risk amount is the money you're putting up to place the trade. The difference between what you buy the binary for and $100 is the maximum you can make, okay? And you can hold it till expiration, and it can be worth 0 or 100. Or let's say you buy the binary at 25, and the market is going up, and you're getting closer to expiration, and the binary is then worth 40 and 50, 60, 70. You could close it out when it's worth 70 and just take your profit from 25 to 70. You can close early, okay? Or if you bought a binary, for example, at 50 and the market's going against you and now your binary is only worth 25, you could exit early and take just a $25 loss instead of the whole loss. So you can exit early whether it's going for you or against you, okay? Neuron asks, can we use S&P 500 or Russell? Not comfortable with the euro dollar. Yeah, Nadex offers 10 different Forex pairs. They offer binaries on the S&P, the Russell, the Dow, the NASDAQ, all kind of different things. I'll show you here in just a moment several of the different ones that they offer binaries on, okay? So that's an example of a long, all right, of a binary long for buying. Now let's take a look at the opposite. Let's take a look at, well, let's look at one more example here. Let's say we were to buy a Nadex binary for $75. Well, we buy a binary for 75 bucks. Our maximum risk is what? 75 bucks. That's the amount we bought for. The most it can be, so if we buy for 75, the most it can be worth at expiration is 100. So our maximum reward is $25. Okay, just another example there for you. So now what if we're selling? What does selling mean? Well, selling would mean, let's just pull back up the platform here. For example, we were looking at this here, right? Well, this statement, the euro dollar will be greater than 1.1280. If we think, yes, that statement is true, it will happen, the euro dollar will be greater than 1.1280, we want to buy it, right? Because we think the statement's true, it will be above that. But if we think the market will be below 1280, then we want to sell it because we're saying no. We're saying this statement is false, right? So binary contract in a nutshell is very simple. It's yes or no, true or false. If we think it's true and yes, we buy it. If we think it's false and no, we sell it, right? Very, very easy concept. Simple concept. So let's take a look at how that works. If we sell one Nadex binary at $75, well, our maximum risk is $25 because when we sell, the amount we sell at, okay, is the maximum amount we can make. So if I sell at $75, my risk is the difference of where I sell compared to 100. And my max reward is the actual amount I sell it for. So if I sell a binary for 75, okay, my risk is only $25, the difference of where I sell compared to 100. The most I can make is from 75 to 0. All right, so again, the amount you sell the binary for is the maximum amount you can make. The difference between where you sell and $100 is your amount at risk. And your amount at risk is the amount you have to put up to place the trade. So in this example, I only have to put up $25 to place the trade. Okay, let's see here. So that is how it works with a sell. For example, let's say we sold one Nadex binary at $50. Well, the amount at risk is $50. The maximum reward is $50. Okay? So that is the difference of a buy and a sell. All right? Let's look at it a little bit differently here. Okay? So this is an example right here of a Nadex ticket. Okay? If I was to click on one of these binaries here on the Nadex platform, it would open up a ticket. So let's just look example of this euro-dollar ticket, right? Right now, the euro-dollar is trading on this screenshot. Euro-dollar is trading at 1.11654, right? Now, this is a buy ticket. I've selected buy, not sell. I can buy it for what? $77.50 right now, okay? So if I clicked buy, if I click $77.50 buy, and I do one contract, it's going to show me the price right here, $77.50. See? The right side, the offer side, is what I can buy it for. The left side, the bid side, is what I can sell for. So I selected to buy it. I'm going to do one contract. And before I ever hit place order, it shows me right here, max loss, $77.50, which is the amount I bought it for. Max profit, $22.50. If I add these two together, what do you think it's going to equal? $100, right? Because the most the binary can ever be worth is $100. Okay? So it's very simple. When I open one of the, if I'm looking at one of these contracts here on the Nadex platform and I decide which one I want to go with, if I click it, what it's going to do is open up a ticket that looks just like this. And I'm going to either click sell or buy, and the amount. Do I want one contract or more? It lets me know right up front the most I can make and the most I can risk. I'll risk, and then I place the order. And if I was to place this order right here, it's going to take $77.50 out of my account and put it on hold until this binary contract settles. And if this binary contract settles and I was wrong, the statement did not happen, then it's worth 0, right? If the contract settles and I was right and it's worth $100, then what? I would get a $100 credit. So I would get the $77.50 back plus my profit, right? Minus the fee, obviously. But that's how it would work. As soon as I place the order, that amount is taken out of my account, put on hold until the contract settles. Okay? So let's take a look at something here. This is really important to understand because as you've noticed, there's a lot of different binaries to choose from and they're all priced differently. You might have binaries priced that you can buy for $5, 20, 30, 40, 50, 60, 70, all the way up to 95. So when you've got a bunch of different ones to choose from priced anywhere from $5 to $95, which one is the best one to go with? How do you know what to do? Well, that all depends on your strategy and your system. There's a lot more we can go into in other webinars as far as strategies and systems, but you know, and we've actually done those webinars. You can find them on, if you go to the Nadex website or to the Nadex YouTube site, you can get all the archives and all the different things we've done. But one thing to look at here, we can buy this for $77.50, okay? We can sell it for $72.25, okay? So what is the midpoint? Meaning, all right, so we can buy it for this, we can sell it for this. Well, why are those two numbers different? Well, that's called the bid-ask spread, right? That's the spread, that's the difference between the two. I can buy for this, I can sell for this. But what is the midpoint between the two here, okay? Well, the midpoint would be $74.80, right? If you added these two numbers together and divided them in half, right in the middle is $74.87. So just looking at this from a price standpoint and from a probability standpoint and a pricing probability standpoint of options, that now this is not taking into account strategies or systems. This is not taking into account looking at a chart and determining the direction of the market, right? The direction of the market can change a minute from now, right? So this is not taking into account your indicators and your charts and your strategies. This is just looking at a pricing model. Okay, notice that, remember, at expiration, a binary is worth what? 0 or 100, right? You might have some binaries that are priced at, you can buy for $10, or you can buy for 50 or 60. This particular one is $77.50. So at this particular second in time, all right, the price point believes that there's a 74.87% chance this binary will expire above the strike price, okay? So technically, Myron says, well, the buy side has a higher probability. Yes, from a price standpoint alone, yes. And why? Well, let's take a look here. What does the statement say? That the euro dollar will expire greater than 1.1161 at 3 p.m. So the statement says at 3 p.m. the euro dollar will be greater than 1161. Well, look at the index. Where is it at right now? Right now, it's already at 1165. So we're saying it has to be above 1161. Right now it's at 1165. It's already above that, right? So yes, it's in the money. It's already in the money. So that's why it's priced a little bit higher, right? What do you think if the market was at like 1150, but the market was way up at 1161? This would be priced really low, right? Closer to 0 as opposed to closer to 100. Okay? So now you can understand when you look at all those different binaries compared to where the market is, why some are priced higher and some are priced lower. Okay? Neuron, all I did was just add the bid side and the offer side together and then just divide it in half. It's the midpoint between these two numbers. Okay? So that's how that works. Now let's take a look at a Nadex sell ticket. Okay, or well, just once again on the buy side, right? So for example here, if we were going to buy a binary for $85, whatever we buy for is our risk, and the difference of where we buy to 100 is our reward. If we were to sell a binary at 77, all right, our risk is what? From 77 up to 100. Okay, so whatever we buy for, or where we buy compared to 100, is our potential profit. And the amount we buy for is our maximum loss. So let's look at a sell ticket. All right, so on this particular ticket here, I can buy for $76.25, or I can sell for $70.75. All right, so let's say I click $70.75, I click sell, I do one contract, boom, same thing right there. My max loss, $29.25, which is what? The difference of where I sold compared to $100. If you add 70.75 and you add 29.25 together, what number you think you'll come up with? $100, right? Make sense? So I want to sell it. My max loss is listed right there, $29.25. My max profit, $70.75. Again, what? These two numbers added up are going to be what? Add up to the ceiling of 100, right? So the most it could be worth is 100, or it could be worth 0. Okay? So same thing here. I can sell it for $70.75. All right, if I look at the midpoint between these two, the midpoint's what? $73.50. So there's actually a 73% chance based on the pricing that this binary will expire above. So if I'm selling against the probability. So I better have a good reason to do that if I'm selling at that price, right? Okay, so does everybody understand so far? Are there any questions on what we've covered so far as the basics of a binary, how it works, and does everybody understand the difference between a buy or sell? Okay. All right, gotcha. I think we're all good to go there then. So once again, if I was to sell this particular binary for $77, all right, if I was to sell it here for $77, my risk is the difference of where I sell up to $100, and my maximum reward is the amount I sold for, which would be $77. Okay, so buy and sell, kind of opposite there. And again, it's just simple yes or no, true or false. Will this event happen or not happen? So what can I trade? Well, you can trade binaries on, let me just pull it up here for you. You can trade binaries on stock indices, all right? Got the China 50, got the FTSE 100, which is the London Stock Exchange, the Germany 30, which is the German FDAX, got the Nikkei, the Japanese market, you've got the US Tech 100, which is the NASDAQ, you've got the US 500, which is the S&P, the small cap, which is the Russell, Wall Street 30, which is the Dow. Okay, so you've got US and overseas stock indices. You've got 10 different Forex pairs to choose from here. You've got Aussie yen, Aussie dollar, euro pound, euro yen, euro dollar, pound yen, pound dollar, dollar CAD, dollar franc, dollar yen. All right, so you've got 10 different currency pairs that binary options are offered on. As you notice, there's a good mix here. If you're an evening trader, you've got Aussie and yen pairs. So you've got Aussie yen, you've got euro yen, pound yen, dollar yen, right? With those two markets are open in the evening. Overnight, you've got plenty of euro and pound pairs for you overnight traders. And then during the daytime, you've got dollar yen, dollar franc, dollar CAD, pound dollar, euro dollar, Aussie dollar. Plenty of options to choose from there that give you plenty of opportunities around the clock. Same with the indices, right? You've got the China and Japan for those earlier evenings. You've got Germany and London for you overnight traders that want to trade the European Open, and you've got the 4 US indices there. Okay, we've got commodity binaries. Commodities meaning something you can actually physically hold in your hand and drop on your foot, right? Copper, corn, oil, gold, natural gas, soybeans, silver. We've got event binaries, economic events, jobless claims, Bitcoin, underlying. There's all kind of different options to choose from there. Okay, there's tons of different options there for you that are available with binaries and spreads, and something that you can always be looking for trading opportunities around the clock. Expirations. all kind of different expirations on certain Forex pairs. And in fact, I think they're still open. No, they're not open right now. On, let's see here, Euro dollar, pound dollar, Aussie dollar, and dollar yen, there's 5-minute binaries, 23 hours a day. That means every 5 minutes there's a new binary opening and expiring every 5 minutes. Very high-paced, fast-paced binary trading. Every 5 minutes there's a new one. All right, there's 20-minute binaries during the day that are offered on the 4 U.S. indices. You've got intradays, which are hourly, or 2 hours, but so every hour you've got new expirations. You've got daily binaries that expire at the end of the day. You've got weekly binaries that expire at the end of the current trading week. So whether you want to get into a binary trade for 5 minutes or for a full week or anything in between, you've got a ton of different options there depending on what you're trading. Okay, so expiration and settlement, like I said, there's different days of expiration, time of expiration. Actually, I think I showed you here a second ago, like on euro dollar, or really any of the Forex pairs. But let me just pull up euro dollar. Even right now, you know, you got 3 a.m., 7 a.m., 11 a.m., 3 p.m., 7 p.m., all the way up to 11 p.m. tomorrow. Weeklies. Here at 6 o'clock when the exchange opens back up, you'll have 5-minute binaries available. You'll have hourlies available. Tons of opportunity there. Okay. And they all have different strike widths. What do I mean by that? Meaning, for example, the ones that expired weekly, okay? Let me show you a quick example here. See these dailies, 1140, 1160, those are 20 ticks apart, right? The weeklies, look at this, 975, 20, these are 50 apart, right? On the 5-minute binaries, they're only 3 ticks apart. On the hourly, they're 5 ticks apart. You've got all kind of different strikes to choose from, okay, depending on what your strategy or system is. You could do one contract. You can do multiple contracts. You can split half. You can do more than one strike on any particular time frame. So many opportunities based on whatever your strategy or system is. Maybe you're a long-term trader and you like to look at daily bars and weekly bars, and you're looking for the overall daily trend or the longer-term weekly trend. There's opportunities there for you. Maybe you're a little bit shorter-term trading. Say you like to trade with 5-minute or 10-minute bars, and you want to trade something that's an hour out or just a few hours out, you know, or you want to look at the closest hour expiration or a 5-minute binary because your system really focuses on not long-term but short-term, the immediate trend of the market. Okay, no matter what your strategy or system is, there's almost always a binary to choose from, normally multiple binaries to choose from. You just have to choose which one is best for you and for your strategy or system. Okay, and they're good for all type of markets, whether you're going long or short, whether you want to buy or sell, whether you're doing straddles, scalps, you want to do premium collection. Some of you may not understand what all that is. Those are all kind of different strategies that we've covered in other webinars in depth, okay? And like I said, I'll show you where you can get some more information on, where you can find some more information, or you can go onto the Nadex website or the Nadex YouTube channel and check out some of the archives there and some of the other videos on different ways to use them, okay? But you know, there's premium collection, there's butterflies. What do I mean by that? Well, just a quick example here, okay? And I'm not going to dig in deep to this, probably shouldn't even cover it, but we have full webinars just based on this. Look at this quick example here. Let's say that, or let's look at the ones for like 7 p.m. tonight, okay? So let's say that the market was, you know, right in here, and let's say that we could, these all have an X by them because, like I said, the exchange is closed from 5 to 6 p.m., but at 6 p.m. it'll open back up. Or let's just look at 11 tonight. So let's just say we're trading the euro dollar, for example, and we're reading the markets. Let's say there's no news coming out tonight. We're looking at our charts and indicators, our strategy, our system, and we don't think the market's going to move a whole lot, right? So we think the market's going to stay kind of right in the middle, okay? Or let's just say the market's right here as an example. And we don't think the market's going to move much past 1.1100. So maybe I want to buy this one right here. That's at 1.1080, right? Because what am I saying if I buy this? If the market's at 1100 and I'm going to buy the 1080, what am I saying? I'm saying that the euro dollar at 11 p.m. will expire above 1080, right? And it's already above 1080. So let's say I can buy that for 80 bucks, just as an example. Okay, so what happens if I buy this for 1080? The market right now is at 1100, and let's say it just stays at 1100, and at 11 p.m. it expires at 1100. This binary that I bought, was it profitable or not profitable? Did it expire in the money, true, or did it expire out of the money, false? Who can tell me? Was I profitable or not profitable? Let me get a little feedback here. Yeah, I was profitable, right? Because the market's at 1100. All of my strategy system indicators, whatever, is telling me the market's going to just be flat. So I bought at 1080. It expired at 1100. So I was profitable. So what if, in addition to that, again, market was at 1100. I think it's going to stay around 1100. That's why I bought this one. But what if at the same exact time that I bought this one, I sold this one? Because what am I saying? Euro dollar to be greater than 1120. I don't think it's going to be greater than 1120. I think it's going to stay right around where it is. So I'm going to sell this, right? What am I saying when I sell the 1120? I'm saying the market will expire below 1120, right? So let's say I sold this one for about 20 bucks. If I sold this one for 20 bucks, what is the most I can make on it? If I sold it for 20, my risk is what? My risk is the difference of where I bought it compared to 100. So my risk is 80. My maximum reward is 20, right? The maximum reward is 20. If I sell for 20, the most I can make is 20. If I bought this one down here for 80, what's the most I can make on that? Also 20 bucks, correct? So that's just a quick example, all right? With binaries, you can trade them directionally. So let's say your strategy or system is a trending system, like you're looking for the overall direction of the market. You think the market's going up, so you buy a binary, right? Okay, but let's say, or the market's going down, you sell a binary, you trade them directionally. Well, I've said a couple of times in this webinar that binaries can also be traded in flat or range-bound markets. And some of you are wondering, well, how? Well, that's how. Okay, you see what we just did there? That's called a butterfly or an iron butterfly. If the market's around 1100 and we think it's going to stay kind of in that range, if I buy a 1080 and I sell an 1120, that gives the market room to go up 19 points or down 19 points, and I still win both sides, right? That makes sense? How we're getting on both sides of it? Okay, so that's just a quick example. We have some detailed videos of how to do that a little more in depth. I don't want to get all into that. I just wanted to show you an example of what I meant by saying it could be traded in different type of markets. Or premium collection is neutral. That's what we call premium collection right there. We're buying one, we're selling one, we're just going to collect that difference in time, kind of neutral, because I think the market's going to stay flat or neutral, right? So there's a ton of different strategies. Okay, there's vanilla options, news trades, spreads, butterflies, you know, with Nadex Nadex spreads. We can do iron condors, do straddle. There's a ton of different ways to use binaries, not just a simple yes or no, up or down. All right, there's ways to layer in and to hedge other type of positions that can be used for so many things. Okay. All right, any questions about what we covered so far tonight about the binary basics? I know there might be questions on other things, but any of you that are brand new that didn't quite understand binaries, how many of you are with us tonight that this is your first webinar, or you're just very new to Nadex, let's say within the last 30 days or so? Oh, nice. Okay. Yeah, I've got several brand new people. Okay. Well, welcome, guys. I appreciate that. Carlos, Carl, Ronald, Philip, Dan, Donald, Alex, Philip, Ronald. Yep. Well, good. Did this help at all to understand some of the basics of the binary and how they work and the difference of a buy or a sell and the risk and reward? Again, some of this was very basic, but when you're brand new, you know, it can be tough to narrow that down in your head. Okay. But good, Dan, glad to hear that. Glad to hear that. Raj, can we put our bidder offer? I'm not sure what you mean by that, Raj. Yeah, if you want to go ahead and put a different, sure, absolutely. Let's just say, and it's tough for me to show you since the exchange is closed right now, but let's just say, for example, let me go back up here real quick. All right, let's say that I'm looking to buy, okay? So I think the market's going up, and I want to buy this strike price right here, 1161. Right now I can buy it for 77.50, right? That's the listed offer that's out there. But I don't want to pay more than 70 bucks for it. Well, I can select to buy it, select one contract, and then I can change this price here. I can delete that and just put $70 and do place order. Now it's not going to immediately fill, right? Okay, because I'm saying I want to buy it for 70. But right now I can only buy it for 77.50. But let's say that I'm like a swing trader, or I'm like a reversal trader where I think the market's going up, but I know most times if the market goes up, a lot of times it doesn't go just straight up. It will go up and then it'll swing down, and then it'll go up and it'll swing down, and it'll go up and swing down and go up, right? Like you ever hear on the news, like before you got into trading, you ever hear, oh, the stock market went up 200 points today. So what do you think in your mind? Oh, well, it opened right here at a certain price and it shot straight up to this price and closed. Well, as a trader now, you know that hardly ever happens, right? The market might have closed up 200 points, but it went up and then it came down, and then went up and came down and up, okay, right? So let's say that you want to, overall, you think the market will go up, but you know at some point it's going to swing down first. And so you want to buy on that downswing, for example. So you don't want to buy at 77. You want to buy at 70 or 65. So you change this to 70, you put place order. Well, then it goes into your working orders and it sits there. And if the price drops down to 70, boom, it'll fill you. Okay? So yeah, if you want to put in a better price and wait for the market to see if it comes down and hits that price and fills you, you can do that. Okay? Or you can just wait for it to drop automatically. Okay? Ronald says, why is the exchange closed? Thought it was closed only on Sundays. The exchange is closed on Saturday and Sundays, but it does open up at 6 o'clock on Sunday. And then each day, Monday through Thursday, it is closed between 5 p.m. and 6 p.m. Eastern time. Okay. Let's see here. I just did a USD. It closed above where I bought it. My transaction showed a sell. Dan says, I just did a dollar yen. It closed above where I bought. My transaction showed a sell of 700. Not quite sure what you mean, Dan. Can you give me a little bit more information on that. How many contracts did you do? Did you get a settlement email? Need a little more information to help you out with that one, Dan. If you bought and the market closed above where you bought, then that should have been a profitable trade. And you should also get a settlement email from Nadex letting you know the payout of that trade as well. Is it true in this case I would be paying a final Alex, you're not paying a premium to buy this contract. This is just the difference of bid-ask spread, which is on any trading contract there is. Forex, futures, even stocks. There's a bid and an offer. Okay. Basically, this is the market makers, all right? Market makers that are out there that actually create contracts. They'll buy from one person and sell to the other person. They're just like a middleman, as it were. And that's how they make their money, is they'll let you buy for this, let you sell for this, and they're just making that difference. That's how a market maker works. Same with stocks and Forex, futures, okay? Okay, Raj, good question here, okay? Raj says, okay, so we all understand that a binary contract is true or false, yes or no. If I was to buy this contract right here, euro dollar would be greater than 1.1161. So if I buy it, right, and can you guys hear me? Guys, did we lose audio? All right, guys, can you hear me now? Guys, are you able to hear me now? All right, guys, are you able to hear me now? All right, sorry about that. It looks like our go-to webinar here had a network issue and cut us off. Sorry about that. All right. Sorry about that. Okay, looks like we're all back and up and running here now. Okay. Okay, so let's get back to, I believe, Raj's question. All right, very important here. Okay, so on this contract right here, what is the statement? Euro dollar to be greater than 1.1161. So if I buy this, I'm saying yes, the euro dollar will expire at 3 p.m. greater than 1161. What happens if it expires at 1161? Is that a profitable trade or non-profitable trade? Did I win or lose on that? Okay, I'm getting some mixed answers here. Okay, it's actually not profitable. That trade would have been a loss. Now, at first, some of you are saying well, no, it didn't expire under 1161, so why would it be a loss? Well, pay close attention. Let's read the statement. The euro dollar will be tied at 1161. The euro dollar will be at least 1161. Or does the statement say the euro dollar will be greater than 1161? Right, greater than. Okay. So let's take a look here. See right here, this Nadex indicative, 11654. Notice this only has 4 numbers. The indicative has 5. Okay. So if it expired at 11610, it didn't expire greater, right? But if it expired at 11611, it would. So does that make sense? Because I know sometimes people say, how did that lose? Because it expired right at 1161. Right, but you said it would expire greater than. Okay? So, but now, so if it expires as a tie, for example, on a buy, that is a loss. Okay? That was not a profitable trade. What if I sold this contract? I'm saying the statement is false. I sold the contract and it expires at 1.11610. It expires exactly at the strike on a sell. Is it profitable or not profitable? Okay. Again, getting a couple mixed answers, but yes, it's a winner. It's profitable. Okay. Because what do the statements say? It will expire greater than 1161. So if I sell it, I'm saying no, the statement is false. So if it expires at 1161, the statement is still false. Does that make sense? So if it's a tie, if you want to call it a tie, okay, on a buy, it's not profitable. On a sell, it is, because it all boils down to just a simple statement, greater than. Does that make sense? Does that help clear up a little confusion there? Because I think we got that question a couple times here tonight. Okay, so on a buy, no. On a sell, yes. Okay. Let me just double check any other questions here. All right, Dan, it says my transaction history shows 7 long. Okay. And it shows my amount as being 700. Yep, that's correct. All right, so Dan, if you bought 7 contracts of the dollar-yen, okay, to expire above 101.25, and it did, all right, you're saying it did. So what amount did you buy those for, Dan? What did you pay for each one of those contracts? Yeah, John, sure. That one right there, John Hurst? Is that the one you're looking for? Okay, so Dan says that he bought 7 contracts, and each contract he bought for $50.07. Okay, he bought the 7 long dollar-yen to expire greater than 101.25 at 5 p.m. And he says that the market closed above where he bought, and the settlement payout shows his payout as being $700. Yep, Dan, that's correct, because you bought them for $50 each, right? And since that trade was profitable, each contract would now be worth $100. So your payout on each contract, you bought it for 50, your payout on each one would be 100. You got 7 of them, so your payout is 700. Yep, Dan, you got it. That's exactly correct. Yep. Way to go, Dan. Congratulations. Very nice. All right. Well, guys, go ahead and hop on over to apexinvesting.com. That's our website. We have literally hundreds of hours of free education. We've got step-by-step training courses on binaries and spreads. What are they? How they work. Step-by-step training courses on strategies and systems, different ways to trade binaries and spreads. We've got news calendars, binary and spread scanners, free deviation levels. We show you how to get some free charting platforms, free futures and Forex data. You can get all that with a completely free membership. Just sign up, get a username and password. You can get access to all of that, tons of information. You can also go to the nadex.com site and get tons of information there. You can go to the Nadex YouTube channel and watch a ton of videos there as well, as in addition to the hundreds of hours you've got there on the Apex site. But take advantage of the free stuff. Take advantage of the free $25,000 demo account that Nadex gives you. Take advantage of the free education. It's all out there for you. Definitely no reason to not take advantage of it. Okay, Dan, we use NinjaTrader for that. Alex, John, you're an awesome presenter. I've learned a lot in a short period. Great. I'm glad to hear that, Alex. I'm glad it's really helped you. So yeah, hop on over to Apex, check that out, take advantage of the free stuff. We've got, like I said, strategy systems calendar, some great scanners, binary scanners that kind of show you all the different options all in one place on one page, all the different ones that are expiring at the different time frames that we don't have to kind of flip back and forth. We've got spread scanners as well. So again, take advantage of all the free education out there. And let's see here. Yep, Alex, that's great. That's great. Eric, thank you. I'm hoping to feel better here. So let's see here. Jim, ignorance is not knowing the answer. True ignorance is not even knowing the question. I've looked from the Apex site and I just can't really find. What is a strike? Okay, so Jim just asked a quick question here and then we'll shut it down. What is a strike? Jim, basically all a strike is, and okay, here we go. So if we're on the Nadex site, let's just pick euro dollar. Let's look at some ones that are expiring tonight at 11 p.m. Okay. Jim, see all these different right here? Euro dollar 1.1360. Euro dollar 1.1340. Those numbers listed is called the strike price. Okay, that's a strike. 1360 is a strike price for this contract. 1340 is the strike price of this contract. All strike means or strike price means is just the price on your contract. Which strike did you choose? Meaning which contract did you choose? Okay, if I chose this contract at 1.1160, 1160 is just, it's called the strike price of that contract. That's all a strike is just the price listed on your contract, the price that says the euro dollar would be greater than X price. Okay, and that's what a strike price is. Okay. All right, guys. Well, thank you very much. I appreciate it. You guys had some great questions for us tonight. I hope this really helped you out understanding some of the basics of Nadex binaries. Again, hop on over to nadex.com, visit us at apexinvesting.com. Let us know if there's anything we can do for you or any questions that we can answer for you. And we hope to see you next Monday and each and every Monday at 5 p.m. Eastern Time for these Nadex Application and Strategy Series webinars. All right? Thank you so much, everybody. Have a great night. Thank you.